If you're a conservative investor or aggressive investor, we're going to explore super dividend investing for your retirement. So stay tuned for the full episode. Thank you for watching. This is Richard with Wisdom Investor. Today we're going to be looking at earning the best dividend you can possibly get on your investments. This is for dividend investing. We're also going to look at some options and some ideas here if you're a conservative investor, and also if you're an aggressive investor. We're also going to look at some top paying dividend stocks. So if you're looking to build a passive income for retirement, you're going to want to stay tuned for the full episode. Today I'm in Southwest Washington State. We're along the riverfront here on the Columbia River. And then on the far side there is the state of Oregon. You can see some of the buildings here along the waterfront here in Washington State along Columbia River. So we're going to talk a little bit about dividend investing. The beauty behind dividend investing is that you can get the compounding of interest. The eighth wonder of the world, as some people call it. But that compounding of interest is really what makes dividend investing so appealing. Plus, in today's world, there's very low interest rates. So you can't get much on your money right now if you invested in a bank. So a lot of people are looking for ways to get a higher interest on your money. Keep in mind, dividend investing, we're primarily using either ETFs or stocks. Now this first category we're going to take a look at is more for the conservative investor. Maybe you're thinking about retiring soon, or you're close to retirement. Maybe you're already in retirement and you just don't want to be aggressive. You don't want to take any big risk with your money right now. So this is for conservative investors looking to get a higher dividend income. This first fund we're going to look at is designed for conservative investors, new investors, or someone who's about ready to retire, or somebody who's already in retirement and they don't want to take a lot of risk with the stock market. Fidelity Capital and Income. You can see out to the right there, the dividend yield right now is 3.43%. Keep in mind, you may see stocks or ETF funds that have a higher yield, but this is a conservative fund here. The mix of equities to bonds is 20-80. That's 20% stocks to 80% bonds. It does pay monthly dividends, and the 1-year annual return on this for the last 12 months is 20.83%. The second fund we're going to look at in the conservative retirement category is the Vanguard Wellesley. Out to the right there, the dividend yield is 2.35%. Has a 40-60 equity to bond, 40% stocks, 60% bonds, pays quarterly dividends, and the last 12 months a 12.49% return. This has overall been a strong fund and is part of the Vanguard group. If you have some of your own ideas on what's working for you on dividend investing, leave your comments. They're much appreciated. The next group of funds are made up of large cap stocks. These can be good for a retirement investor or if you're building a passive income to retire in the future. This first fund is Invesco S&P 500 High-Low Volatility ETF. Its dividend yield is 3.81%, 1-year return of 37.08%, and it does pay monthly dividends. Keep in mind, dividends are profits that companies pay back to the shareholders. The big difference between investing in individual stocks and ETF dividend funds, that dividend funds are going to go out and buy the stocks for you. They're going to do all the investigation and they'll put together the portfolio for you. If you buy your own stocks, which is a good idea for some people, you need to go out and do the investigation and buy your own individual stocks and monitor them. Now, you can do well doing it that way. However, the ETF funds are a little bit more easy to use. Now this Wisdom Tree US High Dividend Fund, yield of 3.77%, 1-year return of 30.36%, and it does pay monthly dividends. We're going to get into some of our high yield funds now. This first one is Invesco KBW High Dividend Yield Financial, 6.88% yield. The last 1-year return was 60.85%, and it does pay monthly dividends. Let's look at the equity exposure of this fund. It's 100% financial services. It's loaded with stocks of regional bank stocks. Now, this fund could do quite well if inflation increases and interest rates start to rise. The next super dividend fund, again, these last two here are aggressive, is the Global X Super Dividend US ETF. The yield is 5.76%, 1-year return of 35.62%, pays monthly dividends. Keep in mind, this fund and the previous fund are aggressive. If you're in retirement and you want low risk, these two funds would not be the best fit for you. Our last group of stocks here are high-paying dividend stocks from the S&P 500. You can see here these stocks range anywhere between 7.84% yield down to 4.55% yield. We're not suggesting that right now is a buying opportunity for these particular stocks. Remember, it's always best to buy low and sell high. But these are some of the higher yielding stocks that you'll find in the S&P 500. And if they fit your investing style, they may be a good choice for you to consider. We reviewed some options here if you're a conservative investor or aggressive investor and you want to start or you're already in a dividend investing program for retirement. So if you're about to retire and you're thinking about dividend investing, we shared some good ideas here. I would appreciate if you leave a comment if you like some of the ideas here or if you have some of your own ideas. Also, hit the like button if you like the content. I want to thank you for watching. Stay tuned for our next episode.